5,000 is the lowest price for gold, but I believe that's still unreasonable. I believe we will see gold reach $10,000. With a ratio of 20 to 1, that means silver is $500. People didn't believe that a gold to silver ratio of 14 was possible. In the 80s, when the bull market started, the gold-silver ratio was about 30. No, up at 80 where it's a great deal. If you buy at 80 and then exchange it for gold at 40, you're getting double the amount of gold for what you paid. If it reaches 20 and you convert, you'll have 4 times more gold than you bought. If it reaches 10 and you convert, you'll receive 8 times more gold than what you spent. Gold and silver are getting ready for what might be the biggest change we will ever see. With gold aiming for $10,000 an ounce and silver possibly rising to $500, the gold-silver ratio is showing a unique and strong chance. In the past, when the silver-to-gold ratio reached extremely high levels, people who bought silver and later changed it into gold at lower ratios increased their wealth significantly. Today, with the ratio still high, the situation is presenting itself again. Unlike in the 1970s and 1980s, today we face high global debt, ongoing budget deficits, and long-term shortages in silver supply. Preparations are underway for a surge of investment in precious metals that might change the value of assets throughout the financial system. Mike Maloney, an experienced teacher, investor, and writer in the precious metals field, highlights how silver's advantage over gold makes it a unique opportunity in today's markets. Now, we share the clips from Mike Maloney's interview. Before we keep talking about this, please subscribe to our channel and turn on the bell icon for updates. Thanks and enjoy the video. Here is a 3-month chart from my website, goldsilver.com. This shows the breakdown he mentioned, ending at 81.53. So this is the 3-month breakdown of the ratio activity. Let's look at all the data, which goes back to 1994 or January 1995. What you see here is that the average is actually quite low, around 60 or below, and we're coming down from this peak of 100. Fue 20 durante la COVID. Estos son datos mensuales, así que es el promedio del mes. It might be the end of the month, but it's not daily data. If you could see this, it reached over 120 for monthly data, while for daily data it dropped to 30. If someone buys silver today at 81 and the ratio falls to 20, it was 14 in 1980 when gold and silver reached their highest prices. If it drops to 20, which I think it will go past, I do expect 20. I will be doing this at 20, where you change some of your silver into gold. But I have high hopes this time. You see, back in 1980, the government had large stockpiles. We didn't experience shortages on the commodities exchange. While there were commodities being traded on the exchange, there were also large amounts of gold and silver stored all around the world. There wasn't a structural deficit where we are wasting more silver each year than we are mining, which is reducing stockpiles to very low levels. There weren't high levels of deficit spending. I don't think a currency crisis was coming, but I believe one is now. There weren't crisis levels that would make people buy silver increasingly. As the media covers this topic more and more, especially when prices reach new highs, mainstream analysts and companies like TD Securities and Morgan Stanley are starting to discuss it, which they didn't do before. As interest in silver grows, prices will rise. I believe $5,000 is the lowest we can expect for gold, but I think that's low. We could see $10,000. With a 20 to 1 ratio, that would mean silver would be $500. No one expected that a gold-silver ratio of 14 was possible. In the bull market that began in the 70s and continued into the 80s, the gold-to-silver ratio was around 30, not the high of 80, which is considered an extreme bargain. If you buy at 80 and change it to gold at 40, you're receiving twice the amount of gold you paid for. If it reaches 20 and you exchange it, you'll get 4 times more gold than you originally bought. If it reaches 10 and you convert, you'll get 8 times more gold than what you paid. Why would someone buy gold at this moment? I let this guide my purchases. This is how I got 300 ounces of silver for each ounce of gold I had. When it dropped below 50 here, I wasn't buying any silver. I only bought gold there. However, I used to make monthly purchases, and whenever the price was above 70 or 80, I only bought silver. That's how I ended up with a lot of silver. If you look at currency, it was $7.5 trillion in the book. but it increased to about 10 trillion in the United States. When you include all the other currencies in the world, that totals about 80 trillion. Then there are 125 trillion in stocks and 145 trillion in bonds. Morgan Stanley recommends that you sell 50% of your investments and put that money into gold. This way, you'll have a portfolio made up of 60% stocks, 20% bonds, and 20% gold. Anyway, adding this and this together comes to $350 trillion. So 1% of that is $3.5 trillion, not $200 billion. We're discussing a completely different level of things happening here. The increase we expect in precious metals is huge. A price of $10,000 for gold seems almost too low. I mentioned $5,000 before, but that number is just unrealistic. That's not even an option. A $10,000 gold minimum feels like fate. Gold can rise in value, and to protect currencies worldwide, a new global monetary system based on gold could be created and linked to it, which would bring stability. Silver will experience a big increase and then likely drop again, but it will still provide you with significant leverage. If we take 1% of each, that's 3.5 trillion. Plus, with the new mix of 20% bonds, 20% precious metals, and 60% stocks, it implies we would need to sell half of the bonds. This is a complete flood. When I first began buying silver, this is a chart from 2002 and 2003. Empecé a comprar oro en octubre. When I bought it for the first time, the spot price was $315 an ounce. I bought silver in April for about $4.38 an ounce, and I made another purchase for around $4.50. At that time, when the price was $4.50, the coin shops had no customers. I entered, and I was the only one inside. Estuve allí por unas horas, the only person present. It basically looked like this. At $4.50, there was no one there. If you shift the decimal 1 point over to today, with a price of $45, there's a small amount coming in. There are a few people. At that time, I was not a dealer in precious metals. I was simply an investor, a buyer, just getting started. Ahora soy un comerciante de metales preciosos. I see that sales are very low right now, but let's consider this again because the news keeps pushing the story. At first, people will hear about silver monthly, then weekly, and finally daily. This will lead to a lot of people coming in. And that is what is needed for this big increase to occur. Silver is usually an industrial metal, but there are rare times in history when it turns into a safe investment or becomes money. Once again, there is a need for money, a need to maintain your ability to buy things and protect your wealth. So, how do the authorities, the commodities exchange, and the government manage this? What do they do to prevent this from occurring? Well, they increase the margin requirements. They repeated this many times in the late 1970s and in January 1980, and they lost control. It could raise the changing margin requirements all the time and then set position limits. Finally, there are liquidation orders only for silver. The CME increases gold margins by 6.3% and silver margins by 6.7%. ¿Qué pasa ahora when you increase margin requirements? We're discussing futures. The commodities exchange is trading futures contracts for paper, it is silver and gold, that aren't actually there. They just invent it, and it's very risky. Sometimes there can be over 300 ounces of paper silver for every real ounce stored in the vaults that can be delivered. When they increase it by 6.7%, you either need to pay that amount in cash if you're already using all your available margin, or you have to sell part of your investment to stay within their limits. However, this time they might lose control of the situation just like they did before. The last time they lost control, it caused a big spike in the final months of 1979 and the first month of 1980. Now, silver is getting close to a crucial point, trading just below $4, down from its highest prices. This moment is not just about technical aspects, but also involves deep psychological factors. When the mainstream media starts reporting every day on new silver records, things could change quickly. While many in the US still see silver priced in dollars, other currencies are already reaching record highs. In Japan, for example, silver prices have exceeded all past levels, showing strong growth over different periods. Technical patterns like the long-forming cup and handle suggest that prices could rise even higher, possibly reaching into the triple digits. Despite this, people in the West are still not very excited, with less interest from retail investors compared to previous bull markets. Analysts point out that silver supplies are extremely low, especially in London vaults, where the available stock could run out in just a few months. When shortages are clear, prices can surge quickly, jumping from 50 fardos to $80, then to $100 or higher, leaving late buyers out. Big institutions are changing their investment plans, lowering their bond investments, and moving towards tangible assets. The small size of the silver market means that even a small amount of investment could cause big changes in prices. Volvamos a la entrevista. La semana pasada, la plata cerró por encima de 46, con un cierre de 4,605 y un precio intradía de 4,663. We are under 4 hours away from reaching record high levels. This means we are less than $400 away from silver being featured in the news every month, then every week, and eventually every day, just like it was in 1980 when its popularity surged. This is measured in US dollars. The US dollar has been strong. What about the currencies of other countries? Algunas monedas débiles. The Japanese yen is strong, and Silverhand says the price of silver in JPY keeps reaching new record highs. However, the media is not reporting on this. Esto es interesante. Here you can see the cup and handle pattern that we were forming from 2012 to 2018, I believe. Then, the cup and handle pattern finished, and it began to rise very quickly. I mentioned that this would be a silver slingshot, and it really has been, especially with other currencies. We're reaching record highs in those other currencies. Esto es lo que el resto del mundo está viendo. We're in a bubble in the United States, and we only see things from our perspective. Aquí está el rendimiento de la plata durante los últimos 2 años. 2 years ago, silver was up 120%, while the stock market rose 55% and gold increased by 105%. So far this year, the stock market has increased by 12%, gold has gone up by 42%, and silver has risen by 50%. Aquí está esa hermosa formación de copa y asa. If we examine it day by day, as I mentioned, we are under $4 away from finishing this cup and handle pattern, which predicts a rise into the triple digits. No estoy seguro de dónde. I'm not the best at technical analysis, but I've noticed that many people do it. I've been doing it for years, and I was the first to notice this 45-year cup and handle pattern. We were all focused on the cup and handle pattern, and it broke. I mentioned the silver slingshot, and it is still moving forward. Pero esto es el diario. Aquí está la semanal, no hay muchas diferencias. Es casi lo mismo. Y aquí está el mensual. We have already received confirmation and a breakout for the year and the quarter. As I mentioned, we're just a little over $3 short for the month, and we still have an entire quarter left this year. We might be reaching the highest levels ever. I'm referring to silver reaching its highest price in 5,000 years in just a few weeks, or even sooner. It jumped almost $1 last Friday. Continuando, el punto es que está haciendo todo esto sin... Is there any excitement happening in the West? Where is all of this originating? Make gold great again, says a sentiment check for buying gold and silver at Sydney's biggest bullion store. No line, no worry about missing out, nothing at all. The exploitation will go on until spirits get better. Well, morale is improving for silver stackers. Many silver stackers felt down for some time, but their spirits are getting better. It's going to... The money grabbing will keep going until people's spirits drop into panic. Then you'll see armed guards at this door and a line that wraps around the block, just like in 1980. I want you to pay attention to this. This is from James Anderson, but I believe Danielle Galley is from TD Securities. This is a report from TD Securities, a major brokerage firm, about silver near 44. This information is a couple of days old, so I was about 44 then, and we're over 46 now, but I want you to hear this. What do you think about silver? We know it's an industrial metal, but it has a much smaller market than gold. Do you think it will surpass its bigger version? We believe this is the final goal of what we imagine for silver. ¿Recuerdas, Andy? Hemos hablado de esto varias veces. This is what we saw as the silver squeeze you can invest in, which is really based on a drain in the tunnels of London. There are stocks of silver that float freely. We believe that the drain has reached a very low level. At the average rate of ETF inflows during past cutting cycles, there are likely less than 4 months left before the LBMI's entire stock of available inventory runs out. Esto significa que el riesgo de que hayan diferencias en los precios es mayor. Liquidity is very limited, and any further reduction from current levels should be managed carefully to support prices in an increasingly quicker manner. He's discussing convex prices. He's saying it rises in a curved, exponential way. He's mentioning areas where, when it reaches 55, the public begins to charge. It rises to 80, creating a large gap on the chart, and you miss the chance to buy at that point. The next day, it might go up to 100 and continue from there, which could definitely happen. Mainstream is just beginning. Ben Rickard states that the classic 60-40 portfolio is no longer relevant. Morgan Stanley suggests selling 20% of bond investments and buying gold instead. Actually, it's 50% because it's a 60-20-20 portfolio. If bonds were 40% and you're selling half of them, that makes the portfolio 60-20-20. Liquidating means selling half of your bonds, which is something Morgan Stanley is recommending people do. Now, this says changing it to gold. No dice plata. Silver might still move slowly for now, but soon many people will learn about the basics of silver. This is very important. David Bateman, el año pasado compré 400 millones en oro y solo obtuve un 0.01% de la producción anual total de minas de oro en el mundo. I also bought $400 million in silver, which is 1.5% of the total annual global silver supply. That's 1,500 times more in terms of percentage. Do you understand why silver is more popular than gold right now? It's the most desired resource on Earth. No aún, David, pero lo será. There is much more demand for gold compared to silver, as you mentioned in the next statement. I want to make it clear to the public that gold is in much greater demand than silver. And it's by many, many times right now, because silver is a tiny market that can't handle too much money coming in. Silver's story is becoming much bigger than just a basic trade of goods. The technical situation is matching up with ongoing supply issues and a worldwide realization of its importance as both an industrial need and a safe place for money. We are witnessing record high levels in foreign currencies, vault stocks facing a lot of pressure, and major financial institutions are just starting to recognize the warnings that dedicated silver analysts have given for years. This blend of basic principles, market attitudes, and changes in institutional investment prepares us for a significant increase in value. The truth is clear. Silver is not just an additional asset. It is a pressure valve in a financial system that is overloaded with debt, borrowing, and decreasing trust. When the inflows speed up, the changes will not be gentle or gradual. They will be intense and grow rapidly, only benefiting those who get in early. That's why it's important to stay involved, keep learning, and get ready before the rush is obvious. The signs are already present, but the actual flooding has not started yet. If you like this breakdown, please like the video, subscribe to the channel, and share your thoughts in the comments. Your viewpoint strengthens this conversation.